Welcome to TradeTheMBI.com. This is John. This report is for the 19th. Well, we got a little more range out of the move the other day. Actually, even the pre-market had already exceeded the general range. We didn't get much further than that, but it was still funny because despite the narrow range, you can still see the angle of rise. So still doing exactly what the shakeout calls it to do. The cyan being under the red, still bullish, no change in that, despite the doom and gloom, the end of the world, blah, blah, blah. I mean, this is, a nonstop echo. But you can see, from the moment we broke below the cyan under the red, we've just been in nothing but an upscale. Now, even before that, though, we could tell that we were, preparing with this offset here of the shakeout when we plateaued. And we turned immediately around from the first dip right there, and then the next bar immediately up, and then it was a climb straight from there. And even in this little teeny soft patch right here, we still see nothing but an escalation by signals all the way across. It's been clean and easy, boring, but if boring can never be said when you're, on the right side of a trade making money with it. So, grin and bear it. Likewise, NASDAQ still, I think, a bit weaker than it needs to be, relatively speaking. Some of that could be Apple, but S&P is still going to be benefiting from this. This is still the euro elevation, just plays into the hand. If we start seeing some changes with that, and we don't really have any answers with healthcare, with finance, so the same blah as far as some of those excitement factors isn't going to change. People then say, well, then shouldn't the market cave on it? No, because the reality is regulation reduction, the improvement in business climate and atmosphere. Psychology is everything. The optics of being pro-business certainly encourage people to take risks versus not. Bonds, again, we know this is extraordinarily elevated and just shouldn't be there, but whatever. And oil, going to maintain itself, I think. Be interesting to see. We saw production reductions, which were usual. Well, that can lift price up here. What we really want to see is increased global demand, indicating growth in the economy. The weakness in gold hasn't changed at all. We're just coming back to fill in the dip below the red line here. We still keep seeing short increase. Has never dipped below the red line. We got close to it, and we got to the peak here, but shorts activated immediately off this one, and it's pretty much taken it back. But this should present nice opportunity if we get the orange dip going below. So I think that would be the one that's definitely worth trading. So here it is, consolidated. You can see the narrow range, and finally big expansion in our Fibonacci range right there on this 5K ES futures chart. Needless to say, though, every time we get to the peak, a little short signal comes in. Nice retrace to the 50%. So these are beautiful new highs, retrace 50%, new highs. This one didn't quite retrace the 50%, so got a little more to go back to it, but we didn't really break out to a new high either. So we're sort of stuck in the status quo of that. The pre-market pretty much gave us the peak move and then pulled back half of it, which, in this particular case is half of the total move, but really pretty much the whole move of the day or the pre-market was retraced. But usually when that happens, what do we look for? We always say, at that point we look for a return right back up to those highs, and that's exactly what we got, and that was easiest trade. So it was both simple down and a simple back up. Liked it no matter how you look at it. I mean, I just wish the broader range was larger so that there's more activity in there, but it just forces you to increase size when you have narrowing ranges. That gets into a whole different philosophy, though. So that's the chart read. There you have it. Not much we can do about the softness of volatility. Crazy, but we'll take the being on the right direction of the trade. That's all we can do. As always, though, trade well. We'll talk to you later.